time and time again. In the newspapers, on social media, you hear spokesmen say that the company's underlying profits have increased by a certain percentage. But what do they mean by underlying profits? Are these directly comparable with their competitors who in their press release talk about adjusted operating profits? I think the scope here for real confusion, because these key performance indicators are not regulated by IFRS. Well, that's not now strictly true because of IFRS 18. IFRS 18 seeks to regulate these management-defined performance measures. Yeah? And these management-defined performance measures now have their own TLA, now have their own three-letter acronym of MPMs. And what the new standard, IFRS 18, does is to require the disclosures relating to MPMs. Incidentally, when you do hear of companies boasting that their underlying profits are up or their adjusted operating profits are up, when you come to look at the statutory accounts, normally they're going down. Or normally, in fact, they've actually got a loss. Maybe I'm being a little bit cynical. But let's talk briefly about what IFRS 18 requires by way of disclosure when companies are using these management-defined performance measures. It now requires an explanation as to why management believe these to be useful, how these MPMs are actually calculated, and they also require a reconciliation of that number, of that MPM, of that key performance indicator in the P&L back to a required measure of profit, such as a reconciliation back to operating profit, a reconciliation back to profit, perhaps. Now, there is a formal definition of MPMs, which I'm not going to read out per se, but it is basically a measure of profit that is used in public communications that's not actually required by IFRS. So we're not talking about earnings per share, for example. And I just think it's brilliant that we've now got regulation in this area, or some regulation in this area, so that we've got an enhanced transparency, so that investors are going to be less confused. Investors are going to have a better understanding. I mean, investors are obsessed with profit, and they can be easily confused by management making these disclosures or making these boasts, making these announcements about underlying profit or adjusted operating profit. And users now will be able to nail down and understand why they're useful, how they're calculated, and how they're reconciled back to the statutory accounts. My name is Tom Clendon, and I am obsessed with strategic business reporting and helping students pass this challenging exam. And we have an IFRS 18, presentation and disclosure in financial statements, and it's a new standard that's examinable for the first time from September 2025. And this podcast is just giving you a flavour, just giving you an introduction, an overview to this new standard. It's called presentation and disclosure in financial statements. So as you would expect, there's no recognition issues, there's no measurement issues. It's a bit of a dry standard in that regard, but it's very important if you are going to be doing strategic business reporting, because it replaces the old IAS 1 standard. Look, the big picture is some of the stuff it says. It confirms what is meant by a complete set of financial statements. It confirms that you've got to have a P&L, an OCI, a statement of financial position, a changes in equity, a cash flow, notes, comparative figures. It sort of clarifies what is meant by current and non-current, whatever. But the other thing that it does that's perhaps new and more examinable is the changes in the profit and loss account, because for the first time, it's defining operating profit. For the first time, it's giving us guidance as to where income and expenses should be presented within the profit and loss account. And it's based on the underlying transaction. It's based on the underlying asset or liability to which the transaction relates. And the standard says there are 5 categories of income and expenses: operating, investing, financing, taxes, and discontinued operation. Now, if I'm cynical, I don't think this is going to make a radical difference to the way companies actually operate, because I think it's largely common sense. The depreciation on your plant and machinery, the nature of the asset is plant and machinery. That's an operating kind of thing. So you deal with that depreciation in operating because it doesn't fit in any of the other categories. Whereas the depreciation on your investment property is of an investing nature. If you have investment property that is not subject to fair value, that is at cost, that building element will be depreciated, and therefore that's shown in investing. Now's not the occasion to go through all the precise definitions, but I guess from an exam perspective, I have to say, I have to be enthusiastic, and I have to say this is going to improve consistency. This is going to improve comparability. This is going to make the financial statements more useful for users. Yeah. And that can only be a good thing. Okay. That can only be a good thing. So, as a student, in answering these questions, we talk about the positives. You will need to go into a little bit more detail about these 5 categories in your studies. This is an introductory overview. And I have to also make reference to the fact that in the big picture, the standard gives us 3 mandatory subtotals. So in a profit and loss account, in every profit and loss account, operating profit, profit before financing and income taxes, and profit or loss must always be disclosed. So it doesn't matter whether you're an internet company, a manufacturing company, a retail company. All businesses have now to produce in their P&L 3 subtotals. Well, I suppose profit is a total, isn't it? Operating profit, every company, operating profit, profit before financing and income taxes. In other words, that would be operating profit plus investment income. Yeah, plus your investing income. So that's all the goodness that you've got. Yeah, profit before financing and income taxes. And then thirdly, your profit figure. So I think this is the brilliant part for me. I just think this will be a massive benefit to investors, and it will aid the transparency, it will aid the comparability, it will aid the consistency, it will aid the understanding. Notice how I'm using terminology that enhances the usefulness of information. It goes back to the framework. All right. So thank you for listening. This is a topic that we will come back to again. This is a topic that you need to be familiar with going forward, because it's a new standard and it's a long time since we've had a new standard. And I look forward to this being tested at Strategic Business Reporting. Please please subscribe. Please follow me on LinkedIn. My name is Tom Clendon. Thank you so much for listening.